Welcome back, traders and investors. I'm Brianna Valesky with Joel Elconin. We have Andy Swan on the line. He is the co-founder of LikeFolio, as well as a three-time financial tech entrepreneur. His second company, MyTrade, was the first successful social network for traders and was acquired by Thinkorswim, which became TD Ameritrade. Andy, thanks for joining us this morning. How are you?
Great, thanks for having me.
So, just to start off, give us a little bit of your background.
Okay, well, so my partner is my brother, and we've been working together since basically the year 2000 when we both dropped out of school to start our very first company called Day Trade Team, which was really cool. It was pretty much the first sort of live broadcast from active trading desks over the web that had video, screen sharing, all that sort of stuff back in '03 through '07. And ever since then, we've, sort of been in the fintech space, always been a big fan of markets, investing and trading and learning just like everyone else, and, trying to provide tools for people to, become better traders and investors themselves and sort of build the stuff we wish existed. That's our approach.
So tell us about your current company, LikeFolio. We browsed it a little bit, and I think it's a really unique idea to let people invest in what they're actually interested in.
Yeah, so LikeFolio, sort of the idea of it sprung up a couple of years ago when we were looking through some of the information we had on especially young people and a little bit more novice investors, and the disconnect that they were feeling from Wall Street and investing in general. This was kind of around the time after the '09 problems with the financial sector, and there's a lot of distrust. And so we started thinking about, what do people connect with, and it came to mind, people are waiting in line for iPhones. They love their GoPro cameras, this sort of stuff. They have a lot of loyalty to the brands that these companies create. So we thought, that's a great segue to get people interested in investing. And so from there, we came up with the idea of LikeFolio, and the basic concept is, we find we're actually searching through all of English-speaking Twitter, so we've got that fire hose of data coming at us, and we find mentions of the brands and products that publicly traded companies create and own, and then we use that data to surface investment ideas, change in consumer behavior, change in underlying market trends, so that everyone from the novice investor can connect to Wall Street, to the more active investor can see what behavior shifts are happening at the cash register for these companies before it hits earnings reports or same store sales numbers and things like that.
So when did LikeFolio launch, and how has it been received?
We launched about, I guess it's been about 15 months, 16 months ago. The reception has been, surprising to us. It's been really, really good. Almost overwhelming response. Everybody understands it pretty quickly because it just makes sense to people to invest in companies that they understand and have an affinity for the brands and products that they create. And it also, we also have found that from a data perspective, it's really started to resonate with hedge funds, quant funds, professional investors are very interested in the data that we're getting because, like I said, it does show those shifts in consumer behavior that can be predictive in certain cases of revenue numbers, earnings numbers, that sort of stuff going forward that maybe Wall Street analysts have not caught on to yet. So it's been fantastic.
That's a really interesting point. Could you elaborate a little more on how these hedge funds and professional traders are using the data? You said it's kind of showing shifts in consumer sentiment.
Yeah, so a really good example. last November, we started taking a look at these sort of teeny bopper, young people, fashion and retail stores like Abercrombie, Aeropostale, BB, I don't know if that's how you say it, or Bebe. And, one of the interesting things we found was there was an extremely, these were all down in terms of both the number of mentions on social media that we were seeing compared to the year prior, but they're also down in terms of the sentiment that people had towards them. They were much more negative than a year prior, except for one outlier, and that was, again, I don't know how to pronounce it, BB, B-E-B-E. And we noticed there that actually volumes were up. The number of people talking about purchase decisions at the stores was up, and the overall sentiment was much higher than the rest of the group. And so we put out a note on that, and suggested that things might not be as bad for that stock as it looked. I mean, it was down around like $2 at the time, or $2.20. And we said this, they might be having a better quarter than anyone expects. And just yesterday it was really cool to see sort of the confirmation of this data come through, where the same store sales numbers came out 8% over the prior period, and beat analyst projections, and the stock was up 20 to 25% just yesterday. So that kind of data points, it's not every piece of data is useful. Obviously, this is Twitter, it's fire hose, or just sort of noise. But when you can find signal like that, which is what we aim to do, sort of outlier cases, there is high value there, and that's what those professional clients are after.
That data must be extremely valuable. I mean, especially if it seems predictive in that way. Were there any other trends that you noticed in 2014? Anything else that stuck out to you?
Yeah, another big one that stuck out that was really interesting. I'm a big fan of Amazon, and just like I pretty much buy everything on Amazon just so I don't have to go to stores. But one of the things that we started seeing in 2014, especially near the end of 2014, was not so much Amazon falling off. I mean, people still love Amazon. The volume's still there. The sentiment is still there. But the other retailers, online presence, Nordstrom, Walmart, Target, even Staples, like all these sort of older, more, you think of them more brick and mortar, but really we're seeing a shift that consumers are utilizing those websites for their online shopping at a faster and faster pace, and are happier and happier with the outcome in the process. Their sentiment is much higher for those sort of older school things. So it's not so much that Amazon's falling off, it's the gap is closing, and Amazon's obvious dominance in online retail is waning considerably, I would say. And so we kind of like pair trades here, because I'm not really sure about the whole retail sector, but I, kind of like pair trades where you can say, all right, I want to go long Target and Walmart, and offset that with a short position on Amazon of equal value, that sort of thing. We kind of like that. So we're seeing that in retail, and the other sort of interesting thing is the way people are reacting to Tesla over the last couple months. People are a little concerned. I don't know if this is really consumer behavior yet. We're still digging into it, but people are concerned, that this massive drop in oil and gas prices could negatively impact the demand for electric cars going forward.
And do you already, or are you planning on kind of monetizing this data that you're gathering?
Yeah, we do. We have professional clients. We are in talks with several quantitative funds to purchase the data. We're working on a product for the active retail investor and trader. That's not ready yet. We've got some things to do before we're going to be comfortable pushing that out. But it's definitely something that we are exploring because, and it's also difficult to do. I mean, this has been something, we process somewhere around 750,000 tweets per day. And so it's a huge amount of data, and we don't want to offer products until we've gone through sort of that statistical analysis to determine what is statistically significant, what is likely predictive, that sort of stuff. So we're getting there, but it takes a while, before it's going to be a product that we feel comfortable offering, out to the retail investor.
Handy, I'm gonna hop in here. I got a few questions for you, and let's just go to the big dog stock. Everybody talks about Apple, and
Yep.
I'm on your LikeFolio. Let's say I know nothing about stocks. I have $1,000 I want to invest, and I know Apple's a good stock. I'm going to your chart. I see this LikeFolio, and I'm looking at the chart here with the different things. What should the average investor? What can they get from looking at your chart here and the different information you have?
On LikeFolio.com, the main idea that we want to expose to that sort of first-time investor is the idea of looking into what regular consumers and the media might be saying about the brands and products that this company creates. So for Apple, this is pretty obvious. This is, iPhones, iPads, and soon the Apple Watch. So, you can click around on there and see what people are saying about that and start to get a better sense of not only what the company does, but how consumers are reacting to it. The other thing that I suggest that people do on LikeFolio, which is kind of hidden, or it's kind of hard to find, but right at the top left, you can click from most mentioned to trending companies, and you can also switch from cash tags plus brands to brands only. And so when you switch to trending companies, brands only, you're really getting a look at, okay, what stocks are behind the brands that people are talking about at a different volume or a different pace than they were 30 days ago or 45 days ago. And so, that sort of idea discovery is a big part of what we're trying to do at LikeFolio.
Okay, and what makes your product stand out over something like stock twits or social media analytics? We also had Frank Lorcher on from Array Analytics. What differentiates your product?
Yeah, I think, as far as stock twits goes, I'm a believer in stock twits. I think it's a fantastic product and platform for people to communicate about stocks. I don't feel that we're competitive with them at all. As far as, everything else, our big differentiator is that we are focused on the brands and products that these companies make. We're not focused on the cash tag. We're not focused on investor sentiment. We're not focused on trader opinion. We're focused on consumer behaviors at the brand and product level in the stores. What are people liking? What are they buying? What are they taking back and returning? What are they ignoring? Product launch-wise, that sort of stuff. So for us, it's all about brands and products and getting down to that Main Street level of individual consumer behavior, not so much about, what people think about where the stock is going today, tomorrow, or over the next 3 months.
So they need to look at this information that you have available and basically make their own buy and sell decisions. There's really no specific recommendations coming from this.
That's correct. We are, like I was telling Brianna, there is on the horizon. We believe that we will have buy and sell signals, but for now, what we're focused on is surfacing, underlying trends of consumer behavior to the individual investor, and then once we get to a point that we feel confident and have a statistical significance to our historical data that we can push out, a little bit more buy-sellish type of signals, we'll get into that. But again, it will be based on the consumer behaviors on the ground, not on trader analysis, investor analysis of the stock.
Do you think there's two ways to use this data? I mean, you mentioned the Amazon decreasing in brand recognition and popularity. Do you think that some savvy traders or hedge fund managers could use this to short stocks as well as buy them?
Oh yeah. That's probably like any good long short fund. That's probably a good portion of what they're doing, and I know for a fact that that is that's actually a really, really highly utilized use case for our data. Is to find companies, especially on product launches or on big events where things are obviously not going as well on the ground as analysts had anticipated.
Andy, you said you were talking about relying on Twitter data. What do you think of the stock?
Twitter stock. So, I'm a huge fan of Twitter. I love the product. I understand people's concerns about maybe the direction of the company compared to Facebook and so on. I like Twitter stock. I bought it last year in the low 30s and had a nice trade. Not as good as it could have been, of course.
Yeah, that's always the case.
But it sold too soon. So it's the story of my life. And then, but I like it again at those same levels. I think that if it could get to 33 to 35 and sort of base out, I would love to start picking up shares. It's kind of popped over the last little bit, and I'm not sure why. But overall, I like the company. I think they've got extraordinarily useful and valuable data sets that they can monetize. So I think it's a mistake to think of them as purely sort of this advertising network like Facebook. I'm bullish, but just like not at this price for me.
Picking your spots. Andy Swan, co-founder of LikeFolio, joining us here on Benzinga's Pre-Market Prep, brought to you by MarketFi. Check out his website, LikeFolio.com, and get a look at what Twitter Sphere is having to say about issues in the market. Andy, thanks a lot for coming on. We'd love to keep updated on this product, so we'll have you on again soon.
Thanks a lot, Andy.
All right, great. Thanks, guys. Have a great day.